Hello guys, welcome back to my channel. In the last video we talked about what are the advantages of. So today we are going to talk about how does Bitcoin mining work. That we have to know what is Bitcoin mining. Bitcoin mining is the process by which new Bitcoins are entered into circulation. It is also the way the network confirms new transaction and is a critical component of the blockchain ledger's maintenance and development. Mining is performed using sophisticated hardware that solves an extremely complex computational math problem. The first computer to find the solution in the problem receives the next block. Begins again. Cryptocurrency mining is painstaking, costly, and only sporadically rewarding. Nonetheless, mining has a magnetic appeal for many investors who are interested in cryptocurrency because of the fact that miners receive rewards for their work with crypto tokens. This may be types see mining as pennies from heaven, like California gold prospectors in 1849. And if you mine, why not do it? The Bitcoin reward that miners receive is an incentive that motivates people to assist in the primary purpose of mining, to legitimize and monitor Bitcoin transactions, ensuring their validity, because many users all over the world share these responsibilities. Bitcoin is a decentralized cryptocurrency, or one that does not rely on any other central authority like a central bank or government to oversee its regulations. However, before you invest the time and equipment, read the explainer to see if the mining is really for you. Why Bitcoin needs miners? Blockchain mining is a metaphor for the computational work that nodes in the network undertake in hopes of earning new tokens in reality. Miners are essentially getting paid for their work as auditors. They are doing the work for verifying the legitimacy of Bitcoin transactions. This conviction is meant to keep Bitcoin users honest and was convinced by Bitcoin's founder Satoshi Nakamoto. By verifying transactions, miners are helped to prevent the double spending problem. Double spending is a scenario in which a Bitcoin owner spends the same Bitcoin twice with physical currency. This isn't an issue when you hand someone a $20 bill to buy a bottle of vodka. You no longer have it. So there is no danger you could use that same 20 bill to buy tickets next door. To counterfeit cash, it's possible. It is not exactly the same as literally spending the same dollar twice. With digital currency, however, as the Investopedia dictionary explains, there is a risk that the holder could make a copy of the digital token and send it to a merchant and the original. Let's say you had one legitimate $20 bill and one counterfeit of that same dollar. If you were tried to spend both the real bill and the fake one, someone who took the trouble of looking at both of the bill serial numbers would see that they were the same number, and thus one of them had to be false. What a blockchain miner does is they check transaction to make sure that users have not illegitimately tried to spend the same Bitcoin twice. This isn't a perfect analogy. We will explain in more detail. Only 1 megabyte of transaction data can fit into a single Bitcoin block. The 1 MB limit was set by Satoshi Nakamoto, and this has become a matter of controversy because some believe the block size should increase to accommodate more data, which would efficiently mean that the Bitcoin network could process and verify transactions more quickly. Why mine Bitcoin? In addition to lining the pockets of miners and supporting the Bitcoin ecosystem, mining serves another vital purpose. It is the only way to release new cryptocurrency into circulation. In other words, miners are basically minting currency. For example, as of March 2022, there were just under 19 million bitcoins in circulation. 21 million. Aside from the coins minted via the Genesis block, every single one of those bitcoins came into being because of miners. In the absence of miners, Bitcoin as a network would still exist and be usable, but there would never be any additional Bitcoin. However, because the rate of Bitcoin mined is reduced over the time, the final Bitcoin won't be circulated until around the year 2140. This does not mean that transactions will cease to be verified. Miners will continue to verify transactions and will be paid fees for doing so. In order to keep the integrity of Bitcoin's network, to earn new Bitcoins, you need to be the first miner to arrive at the right answer or closest answer. This process is known as proof of work. To begin mining is to start engaging in this proof of work activity to find the answer to the puzzle. No advanced math or computation is really involved. You may have heard that miners are solving difficult mathematical problems. That's true, but not because the maths itself is hard. What they're actually doing is trying to be the first miner to come up with a 64-digit hexadecimal number that is less than or equal to the target hash. It's basically guesswork. So it's a matter of randomness, but with the total number of possible guesses for each of these problems numbering in the trillions, it's incredibly work. And the number of possible solutions only increases with each miner that joins the mining network. In order to solve a problem, first miner needs to a lot of computing power. To mine successfully, you need to have a high hash rate, which is measured in time gigahashes per second and terahashes per second. Aside from the short-term payoff of newly minted bitcoins, being a coin miner can also give you voting power when changes are proposed in the Bitcoin network protocol. This is known as a Bitcoin Improvement Protocol, BIP. In other words, miners have some degree of influence on the decision-making process for matters such as forking. The more hash power you possess, the more votes you have to cast for such initiatives. How much a miner earns? The reward of Bitcoin mining are reduced by half roughly every 4 years. When Bitcoin was first mined in 2009, mining one block would earn you 50 Bitcoin. In 2012, this was halved in 25, 2016, 12.5, and May 11, 2020, 6.25 Bitcoin. As of March 2022, the price of Bitcoin was around $39,000 per Bitcoin, which means you did have earned $243,750 for completing a block. Not a bad incentive to solve that complex hash problem. Detailed above, it might seem to keep track of precisely when these blocks will occur. You can consult the Bitcoin block, which updates this information in real time. Interestingly, the market price of Bitcoin has throughout its history tended to correspond closely to the reduction of new coins entered into circulation. This lowering inflation rate increases scarcity, and historically the price has risen with it.